looking here, we have the extension exhaustion, the wedge drop, the EMA crossback, the base and break, and the reversal extension. Now, right away, we already come down, cross back over the EMAs. Now, right here is actually where you're getting your wedge pop. Where's this candle? Okay, so right here, if this were to have pre-market data, or just you imagine a candle in your head for the leg down, you're getting your bear flag and pop, or your bear channel. Oops. You're getting your bear channel here and the break. So right here from the break, you could use your 9 as the stop. That wedge break on, or sorry, that wedge and break on the 1 minute time frame also corresponds with what ended up being the big move of the day, the 8 and 20 EMA cross on your 5 minute. So you could have entered, you could have seen the wedge forming, the wedge and pop that you know is coming, to correspond with the 821 cross on your 5 minute time frame, and then use your 8 EMA as your stop loss. You know it's going to come down, and then you expect the EMA crossback to happen. Crossback, you look for it, it's going to base. Which the channel is a little bit wider, but the EMA crossback in the base, this was the channel. This now becomes like your opening range channel. You'd have already secured profit because you rode this cross down after the flag on the 1 minute, all the way down until the EMA crossback happened at 11:35. These SPXs went at this point from 30 to 80. So you'd have already been up pretty nicely right there. If you're an intraday trader, you could have just cut and then look for a re-entry, especially if you're an intraday trader, because you know that this next step is base and break. You know the next step is base and break, which for an options trader where your contracts lose value from theta decay, you might want to have exited right there. So now it's holding the EMAs, it crossed back, that's where you get out. It's basing, and then it broke. So now I don't know what's going to happen in the rest of this day, but we broke the consolidation, we broke the base, and you can see it's clear on the 15-minute time frame, but you could have got back in at the break of the consolidation. So after the base and break, we're expecting it to probably exhaust itself here for the reversal extension, potentially into the end of the day today, which looks like it's going to happen. But just as we ended on the flat consolidating candle at the end of the day yesterday, this is likely going to extend the full reversal, and then we could look to recreate this game plan throughout the day tomorrow. Just using sort of what we saw here, waiting in the morning for the EMA crossback, and then confirming the cross that we saw here, the EMA crossback here on a smaller time frame, which it started to flag before it crossed, and then that could have been our entry long. So that's what I'm going to be looking out for tomorrow. That's what I look for every single day. That's the intraday version of the mastering EMAs strategy. And you could see then obviously how this would work for swing trading as well, if that's your style over the course of, let's say that these are daily or weekly bars. You could go for the cross, enter your position, take some profit. You expect it to base. If it holds, you can add at the hold, you know, maybe secure profit. But again, the whole thing is just using the EMAs to your advantage.